Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the euro currency. So as we're gradually coming to the end of the year, there are some interesting events. It's now happening on markets and political, economical spheres. So it was week really tough, and a lot of important news have been released. So just to name some few, it's Fed statement, phase 1 agreement between the United States and China on the mutual tariffs, elections in the United Kingdom. So if we will set them, all these events in the overall situation that stands in the economy of the European Union, of the United States, so that's really the objects, the moments that we need to think about. And as we promised in our daily updates, today in the weekly report, we have taken a look at extended perspective on the euro currency, on the weekly chart, on the monthly chart. This is not the scenario that we have talked that definitely should happen, but currently the fundamental background that exists on the markets, I mean the surprising statistics in the European Union in the last month, so a lot of positive moments have been released. Overall sentiment in the European Union that's improved significantly. Some technical issues that we have on the euro currency as well suggest that this scenario really could start to form. So we think that this scenario has not zero probability, and it could be achieved. Besides, since this scenario is based on the clear patterns, the existence of the pattern by itself gives us the tool that we could use for controlling of the development of this pattern. And the pattern, as you know, is useful not only with the normal direction, but also when it fails. When pattern fails, it clearly tells us that market is turning in the opposite direction. That's also useful. And that's the importance of the pattern that you have, despite in what direction it points. Because as bullish pattern, as bearish pattern, it lets you to trade in both directions, just by controlling how price action behaves with this pattern. Does it follow it with the normal direction, or it fails to follow it? That opens the opposite direction. And here is the same story. So you could read our weekly report, see what's going on the monthly and weekly chart, at least what we suggest here. In the shorter term, guys, we mostly will deal with the same ABCD pattern that we have on the daily, as we have suggested on Friday. It's indeed, market has shown the pullback here because speculators have booked the profit because two major events has happened. Agreement has been achieved. Elections have been done. So that was the time to sell on the facts. So we know this well-known proverb, buy on rumor, sell on the facts, and that particularly the moment of the selling on the facts, when the speculators close the positions before the weekend, getting the result of the rally that has happened in this week. So currently market stands at a strong resistance. So on the daily chart it's just the 618 level. But if you will take a look at our weekly chart, you also will see that 1236 is the 30% level as well. So here, 1208, 1236 is our confidence resistance in the weekly chart. It's accompanied by the COP target, which already has been hit. And take a look at the daily, our bond is all stands very close to it. So since this is really strong level, and market at the same time keeps the bullish sentiment, it means that within a few times market could try to challenge this level. So our first attempt already has been done. As you can see, market has shown the pullback. And currently, this combination of the bullish sentiment here and the existence of the strong level suggests that we could get the following trading plan. We could try to take the long positions on the pullbacks with the closing them around the confidence resistance, while the market will make the challenges on to break it up. At the same time, when the market will make the challenge, we could keep at some fractional of our position with the break-even stop in the hope that maybe this time the breakout will happen. So the logic is very simple. And currently on the intraday chart, we already have the first setup that we could follow. Take a look as the pullback stands in progress here. So this collapse has happened. We have some kind of the hand and shoulder shape. This clear AB potential C point where the top of the right arm could be formed. First point where we'll consider taking the long position. Take a look. This is COP, potential target, which stands right around the neckline slightly lower. And take a look here, we have two levels to create a confidence support 111, 111.15. It means that potentially this situation is suitable for the Judd Napoli so-called OOPS pattern. So it means it suggests the failure of the classical pattern when it has confidence support right below the neckline. So as the classical pattern suggests the breakout of the neckline and coming to the OP, forming AB equals CD type of action, existence of the strong support could lead pattern to failure. So market hits this confidence support, then suddenly reverses up and showing upward continuation instead of the downward continuation. So that's the idea of the Judd Napoli directional pattern. And here we have approximately the same situation. Unfortunately, we do not know yet how market will behave with this leg down, because COP is based on this C point. So it suggested initially that market should reach the neckline, showing the retracement, and then starts dropping to the COP. But maybe market could directly drop right to this level and then starting upward action. So anyway, 111 area is you could consider where we could take the long position. If hand shoulders will not fail and market will not proceed move high here, start dropping back to the OP, next point where we will consider taking the long position 110.60. This agreement with the OP and major 600 support. So that's potentially two levels where we'll try to take the long position. First week we will start right from this level. So the common rule that we have to follow here is to move stops to the break-even at the first chance. For example, market will drop on Monday right to the 111 area. There is no COP yet because the C point is not in place yet. So we don't have actually ABCD pattern in place. That's why here you could try to take the long right around 111. But when market will start to form the upward pullback, move stops to the break-even and see what will happen. So if indeed C point will be formed, market starts dropping again, you could make the decision where to close position here or just wait for a OOPS pattern will be formed. But do not forget to protect your positions with the break-even stops, because that's a really crucial moment in the current situation. The same story is about this entry. So that's two setups that we will keep an eye on the short-term perspective of the euro in the coming week. So, and we will keep an eye on, of course, on the longer-term situation, because it's really very interesting and promised, at least currently, it's really significant price action in the coming year.